last quarter of 2024 was marked by significant industry shaping activities in the African alternative finance and cryptocurrency space, positioning Nigeria at the center of discussions for 2025. These developments have set the tone for potential disruptions and progress, particularly in the DeFi and, of course, digital asset markets across the continent. One of the biggest highlights came in October 2024 when Nigeria ranked second globally after India in the Chainalysis 2024 Crypto Adoption Index. This recognition made Nigeria the only African country to break into the top 20, reflecting its strong performance in multiple adoption metrics. This morning, Lasbery Olidimu, Vice President of Global Operations and Managing Director of Yellow Card Nigeria, joins me to talk about this fit. Thank you so much, Olidimu, Madam Olidimu, for joining us on the show.
Thank you for having me.
So let's start by understanding how defining the cryptocurrency space was in 2024 for Nigeria and Africa.
Generally, the space has been growing, right? What we saw in 2021 wasn't exactly what we saw in 2022, 2023, and 2024. So there has been trends and there has been huge adoption, right? Both for Nigeria and generally, if you talk about the sub-Saharan Africa, there has been huge adoption. There are so many reasons that led to the huge adoption, right? One of the reasons, or you can actually say this is the trend, right? What we are saying currently, they're actually the factors pushing the adoption of cryptocurrency. And one of the things that we see that has really gone to increase the adoption of cryptocurrency is the rising use cases or use of stable coins, right? So many people are now using stable coins, and because of the use cases, there is huge adoption and when it comes to cryptocurrency. And there is a reason why Nigeria ranks among the first 20, and even sub-Saharan Africa leading that chart. One of the reasons is down here within the African continent, most of the African countries do have FX issues. And businesses, individuals, corporate organizations are now using stable coins as an alternative. And they're using the stable coins basically to do digital payments, and also to do cross-border remittance, or maybe pay for their invoices outside jurisdiction, or trying to manage their treasury, right? And another thing that has also increased the adoption of cryptocurrency is the regulatory clarity we are seeing currently. So many African countries are moving from that space where they say, oh, we don't know what you guys are doing. If you trade in crypto, you're doing so at your own risk. Now we're seeing the regulators trying to research, trying to build regulations to guide and protect the consumers. So there are so many things happening. And another thing we have also seen is the issue of the traditional finance having a handshake with the sector, right? Just last month, we had about Standard Chartered with their first license to act as, digital asset custodians. So these are some of the factors that have actually increased adoption. And I think the adoption will still be on the increase because there are more people that need to use this digital asset. Regulators are trying to guide us through.
Okay, so I'd like to bring to the fore the speculation about Nigeria truly leading innovations in Africa. Some people think it's not so, and some people feel it's merely, Nigeria benefiting from existing global trend. How true is that postulation?
Okay, I think we should actually focus on figures, right? I know there are so many opinions out there. Oh, this is not true. How did they get about their figures and all that? But I think Chainalysis is one organization that has actually taken their time to collect figures and do a comprehensive analysis, right? And if you look at the Chainalysis reporting for 2014, it gives you the true figures And anybody saying, oh, this is not the true figure because they don't have, probably they don't have connections to speak with the local players and all that. That is not true. In my own opinion, I want to believe the Chainalysis reports, right? Because they are right at that report with figures, and they have all to prove that this report is true. And I also believe it because if you look at the population of Nigeria, the highest population in Nigeria are the youths, right? And these youths are very smart. These youths are educated. We are all inquisitive. We want to know what is happening in the region. And we want to know what is happening in the world, not just in the region. And given that Nigeria also falls within those countries in Africa where we're having FX liquidity issue, this is also driving the use or the adoption of cryptocurrency within Nigeria. So back to your question, I'm of the opinion that the Chainalysis report is correct. It may not be 100% correct, but it's backed by figures. And we're also seeing that in the industry.
Okay. All right. So now that we see that Nigeria is ranked second globally when we talk about crypto adoption, some people are saying that it has to do with the weak traditional banks when you look at their infrastructural setup and the fact that they are not catching up with the modern trend and the inclusion of technology per se into their mode of operation. That is why you see people now shifting towards alternatives, people looking at fintechs and cryptocurrency to drive some sort of transactions. How true is that, and how will you describe the traditional banks?
Okay, the traditional banks, they've always been here, right? And they've always had their infrastructures and platforms and systems and technologies set up, even right before we're born, right? And one thing I have seen in the banking system, they may not be as tech savvy. Not all of them are that tech savvy, I know, right? But they have their own standard and they operate within those standards. They build their infrastructure and they work with it, right? I can't really say that is as a result of the traditional finance sector not being tech savvy. That's why people are now having these alternatives. Right? Fine, it might be a factor, but there are other factors that are making people to use stable coins, to use cryptocurrencies as a store of value. And one of those factors, like I mentioned before, not just particularly for Nigeria, but the rest, most African countries where we have FX shortage or FX liquidity issues, right? So people are now, it's because they have to make business has to go on, right? And because they need to make transactions, because they need to push their operations, they are now turning towards getting alternative to just having swift payments cross-border, probably when they do international purchases and all that. And another thing, if you also look at the process or even the cost implication for making those transactions, this fintech or cryptocurrency or even stablecoin in particular, when you do your transactions or when you make those cross-border payments with stablecoins, it's faster, right? And it also saves you some cost, right? So if you're talking about the speed, fine, we'll go back to the infrastructure of the traditional finance. But how about the cost of sending that, sending the transactions or sending the funds across board? So fintechs or crypto, particularly stablecoin, is an innovation, right? And the innovation has actually discovered how those transactions or how those funds can move from one border from one country to another at a reduced rate,
okay,
with a better speed, right? So there are other factors, not generally the infrastructural system in the bank, right? There are other factors contributing to the adoption of cryptocurrency or even stablecoin as is mostly used.
Okay, so still looking at the issue around how good this cryptoverse is and how beneficial it is, we've still seen cases of regulations not being optimal to deal with issues around criminal activities, fraudulent activities. We've seen speculative rush within the space. We've seen profit-seeking traders within the space. How safe is the cryptoverse? How safe are these transactions for those who would want to use them?
Okay, just let's look at the number of people using it, right? As the day goes by, there is an increase, right? Let's say we have about 1 million people using it today. In the next 1 month, we have more than 1 million people using it in Nigeria. That's just the fact. We have seen the facts, right? We've seen the analysis, and there is always is always on the rise, right? So if we have to protect consumers in this space, I think the focus should be on regulation, right? Fine, Bitcoin has increased from $5,000 to I think years back it was about $5,000. It went to $8,000. Now it's about $97,000, right? So many people want to go into this space. So many people want to invest in this space. And we can't limit the number of people that go into the space. What we can do to keep them safe is only to push for regulation, right? Regulation is there to protect the consumer, is there to protect the space, the market. And if there is no regulation, you see people there'll be a rise in fraud and every other thing. But if there is a regulation, we have like a set down rules how all the players should work, right? We have a set down rules for the standards or even the anti-money, the fraud tools that should be used by those players. So if we need to keep the space safe, there has to be regulation. If there is no regulation, then I don't guarantee the safety of the people using it, because there are some bad actors that we need to kick out of the system. And we can only do that if we have a regulation, right? I kind of commend the said DG who took office. I think it's less than in a year, and he just rolled out the regulatory incubation program where players, exchanges can actually apply and operate under the supervision of the SEC. That's commendable. That's
but there's
the first
fears
step,
that
right?
these regulations could stifle growth too. Just about 30 seconds. I need you to speak to that fear.
You can only say this regulation we're all pushing for will reduce the number of people going, or even the players, or even what the value to get out of it. But it has to happen, right? Things must be done in the right way for this market to grow. So let's focus on having a set down rules that we can all comply with and push for the growth of the system. For you to say, regulation will only reduce what the value you get out of the market, it means you're not doing things the right way. But if you're doing things the right way, you have to push for regulation, because regulation is the only thing that would make people buy into your products, to make people buy into whatever you're bringing for them. So I don't think it's going to reduce growth, but I think it's going to protect the industry. I think it will rather push for growth within the industry. Things have to be done the right way, and we can't do it without regulation. So I don't think regulation is going to reduce growth. I think regulation is there to make everybody act in a same way, right? There's always a standard, and we're all required to comply with that standard. That's what regulation is for. Regulation is not there to kill businesses. Regulation is not there to drive people out of the sector, but regulation is there to protect the consumers and make sure that the market is sane, and make sure that the bad actors are kicked out of the system.
And we also hope this will translate into transaction efficiency within that space too. Thank you so much, Lasbery Olidimu, Vice President of Global Operations and the Managing Director of Yellow Card Nigeria, for sharing your thoughts with us on the show.
Thank you so much for having me. It's a great pleasure.